just because you locked in a cheaper rate does not mean you ended up winning the long haul. A lot of times a cheaper rate just means more interest that you end up paying. My name is Luis Cuba Arias. Like I said, for these last couple months, I've been jumping into real estate, focusing on the loan under the guidance of one of the top loan originators in the country. And we just had a client trade in their 5% interest for 8% and still saved over $200,000 in interest. Let me show you. Here's the breakdown. This lady has a house worth around almost $470,000, still owes $350,000 on it. Got a good sweet interest rate, 5%. She's been in it for almost 2 years. She makes roughly about $9,000 a month. She has $15,000 sitting in a different bank that ain't doing much for her. So we're gonna move that over into the first lien Heloc to lower her principal balance. Again, any money that's put into this account, you have access to it for up to 30 years. So any money that goes in can come out whenever you want. After all her bills are done, this is the breakdown. She has about $3,600 left over. And boom, she could pay off her house in less than 7 years. If she stays on her 30-year fix, she have a total interest paid of $303,000. But if she focuses more on deposits and not so much on cheap payments, she could be done in 81 months, only have paid $103,000 and have saved a total of $200,000 in interest payments. Like I said, this first lien Heloc is the most effective strategy to knock down your principal balance as much as you can by switching your mortgage into a banking account, to a checking account, and you depositing all the money that you put in there. You're effectively lowering your principal balance by every deposit. And since you keep lowering your principal balance at a faster rate, the amount of interest that you're being charged is even lower. But just because you put money in there does not mean you can't take money out. The money can be taken out whenever. And because of that, you have access to equity up to 30 years. And these are the numbers and the breakdowns. Here they go again. On a 30-year fix, the average principal reduced annually is only 3%. When you focus on the deposits and you switch it up over here, the average principal reduced here is 14, almost 15%. By year 7, 81 months, she'll have the loan completely paid off. $350,000 worth of equity, where she could take that money out and go keep playing more real estate, buy other property, focus on some business, whatever she wants. But if she stays in the loan that she's in, she's gonna still owe $304,000, have only paid the loan down $45,000.